Well, good. Where are we at? Afternoon in the East Coast, and of course, good morning on the West Coast. I hope you're well. I hope you had a great weekend, and I am delighted that you are joining me today for this live market update and charts of the day. And thank you to all of you who hooked into last week's webinar. It was a good session, and delighted you could make it along. And for those of you who were able to, if you weren't and would like the recording, of course, just pop me a little email through and I'll avail you of that. Some interesting things coming up this week, which are really worth keeping an eye on. So just keep your eyes peeled for events coming up. But let's get into the story of the day for today. And of course, before we do, just to make sure that we pop up this little important message to start the session off. Make sure, of course, that you do your own due diligence on anything you see here. Make sure you follow trading plans and, of course, make sure that you manage risk on every trading action. Vitally important, of course, and all your activities should be consistent with your own personal trading objectives and financial situation. That important message being covered, let's get into some headlines, and then, of course, we'll have a look at some charts and see what we can find. And we shall do that by, as I said, first looking at what's come across the newswires today. Of course, we had a little PPI blip late last week. It was significantly higher than expected, the highest jump since 2022. That upset markets temporarily because, of course, what it does is it suggests that there is inflationary pressures present. At this stage, it's looking obviously PPI is wholesale, strike industry inflation rather than on the consumer, but invariably the decisions are going to be made by producers as to whether to pass those on to the consumer or not. So, despite that soft CPI number we got previous to that, be interesting to see what transpires subsequently. Of course, also we got continuation of some great earnings. We are nearing the end of earnings season. And the latest scores on the doors is that 90% of the S&P 500 have reported earnings, 81% still beating um, 81% still beating EPS expectations and 80% beating revenue expectations. Really a strong performance for earnings season. And that certainly helped markets stay relatively buoyant, of course. US futures, when last I looked, were trading slightly higher today. We'll have a look at charts in a moment, see what they're doing live. And Asian markets were generally positive in early trading, just to give you the latest scores on the doors. Um, we've got the ASX trading almost bang smack on neutral. We've got the Nikkei up around about 0.85%. Chinese and Hang Seng both looking okay. We're essentially a little bit of a market in waiting because of the trade talks that are going on this stage. It looked as though there was a disappointing meeting between Putin and Trump last week, but it does appear as though there's been some progress over the weekend. So we're waiting for more details on that. European futures are pointing to a cautiously positive open. The US dollar index is trading mid-range, and gold is holding that 3,350 support that we referenced last week. Copper is still showing signs of buying back into the king of base metals after that recent major tariff-induced drop. And all continues to look bearish. We'll obviously have a look at all of those charts in a short time. And Bitcoin continues to pull back from last week's high. In terms of news expected, obviously earnings, we do get some of the retailers reporting this week, even though it is the back end of earnings season. And of course, any new trade news will be continued to be important. Today, there's US housing data, Eurozone trade balance. Be interesting to see how those numbers play out. Watch throughout the week for the RBNZ rate decision on Wednesday, UK CPI, and also the Jackson Hole Symposium, which is an economic event that happens every year at this time of the year. And the major act is always the Fed chairman, who gives a little bit of a deeper dive on what expectations may be in terms of Fed policy. Of course, there's the major pressure from the current administration on continuing cutting of rates and the extent to which that's done. But at this stage, the September rate cut is virtually priced in completely. It's after that that the uncertainty is, but maybe we'll get more clarity. That's towards the back end of the week. I think Jerome Powell speaks on Friday. So let's check out some charts and see what's going on. Um, there we go. We should be able to see them any minute now. And I've just started with a chart of Bitcoin, as it is showing significant movement in today's trading. You can see the support that's in place at around about 116,000. That looks as though it's under pressure. So we had that surge up last Monday, and then subsequently we saw it just drift downwards um, from that record high of 123,500. So that test to the downside looks important, and possibly could see us down to around about 112,000 should we get a breach. But if we look at an hourly chart, it is looking quite precarious. The last hour has seen some additional selling, and so that looks technically a right now sort of thing to keep an eye on. If we look at the US 500 daily, you can see that's holding on to these record highs fairly well at around about 64, 65 on the futures contract. The market regime indicators suggest that we are in an uptrend on the daily chart, low volatility. We might move to choppy soon to range bound soon if we don't get a move higher. So that'll be interesting tonight. Um, you can see the back end of the week was a little shiny, but you can see today's futures contract is actually showing some buying coming in. There's the start of the Asian session. So looking for a breach of around about 64.70 suggests a push up. We did see some selling in the Nasdaq, but we've seen some buying come back in again. Record highs hit early last week, just a pull back from 23 or around about the 23,800. Looks as though it might be creating some sort of support for right now. On the FX front, I mentioned the US dollar is still looking quite ordinary. We are mid-range theoretically, at least from a technical point of view. I would put the resistance at around about that level, support somewhere around about 897. So you can see we're sort of mid-range at the moment, but we are in a downwards trajectory. And consequently, because there's not been a great deal of movement in USD, if we look at gold, it is sort of stuck around that 33.50 level. If you look at an hourly chart, you can see it in a little more detail. But we are challenging Friday's highs, which is sort of interesting after a little bit of a sell-off early doors in Asia. So this is looking interesting, but this last candle hasn't been compelling. Move up through here could take us up to around about 355, 360, but all looks a bit messy for a Monday. Copper, however, doesn't look so messy. We saw this green shoots of a rally starting after that big tariff-induced drop. A little pullback to retest that level at 448.50, and a strong session on Friday to put us at the highest point since that drop. This level at 457 is really key in terms of being a resistance. You can see it was support through April and most of May, and also there's some consolidation of price action mid-Feb to early March. So this looks like an interesting level at 457. And if we should get a breach of that, and I think this is worth keeping an eye on, particularly possibly during on the open of the LME this afternoon, maybe 472 is the next level. That would actually be consistent with the 200 MA as well. So possibly an interesting move to be had there. But as I said, oil just continues to look fairly dreadful, really. We had that major drop over the course of a couple of weeks, which took us not only back through that 200 MA, but also through $66. That testing this top end of this range that we're in through, you could even push this down, to be absolutely honest. So back into this range between around about 63.28 and 58 in the medium term. In the short term, it moved down to 60. Looks like the trade to watch. Now, on to the individual FX crosses. Let's have a look at what's happening. Here's the US yen. We're seeing some buying into the USD this morning, certainly against the yen. This 147.50 looks important on the hourly chart. Possible move up if we breach that to around about 148. Possibly a little below that, the resistance there. We did hit a wick there is at 147.96, just to put it in context. So possibly we may see an accumulation of sell limit orders around just beneath that 148. So you'd probably look for that 40 pip move to the upside, but it is actually looking fairly reasonable at this stage. If we look at the Aussie yen, on the hourly chart, you can see some definite buying coming into the Aussie yen. We've got that breach of 96, which is technically important. You can see that double top formation on the hourly chart. If you just take it out a little bit onto the 4 hourly, again, that's just sort of reinforcing that. The issue is with this, and why I'm not jumping up and down about it, is this potential key level of interest at around about 96.15. So we've actually tested that in trading uh, today already. You can see on this candle and just pulled back from that. So I'm wondering whether maybe some consolidation in this sort of 15 pip range here before we get a challenge to the upside. If we do breach 96.15, I think that's the higher probability trade. But again, I think we're scratching possibly for around about 20 pips or so. So I'm not jumping up and down about that. If we look at the GB pound yen, this is um, 200 is the key level on this. It's a nice round number. You'd probably wait until there's a breach of 214 or 15. Let's just check out the euro yen to see how that's doing with this across the board yen weakness today. And this probably looks like the best chart of the lot from an FX point of view. You can see we've paused with about 1, 2, 3, 4, 5, 6 pauses, 6 challenges on the 30-minute chart, 172.58. Put it on a daily chart, and you can see really the next level of interest is around about 50 pips up at 173.05 from where we're trading now. That doesn't look like a let's just say 170. Yeah, let's say 173. You'd probably put your take profit around about this 172.94 level, just because again there'll be some liquidity around here with existing pending orders. So this looks like a higher probability trade than some of the ones we've seen. Let's just change change this just to give you a little more detail on how. One way you could play this, so if we get a breach of that, an obvious stop would probably be around about this 172.34 level. And what you may do, there is a potential pause point at 172.73, as you can see where I put that line. This was resistance here and here. So this is a good point at which, even if you've got a target here of 173, this may be a good point at which to trail stops to a break even or even just a little bit above that. And then, of course, should it breach that, you can then take it just beneath that line. So that line could be useful in terms of profit risk management if you do choose to look at this for yourself. Outside of that, so it's the yen crosses that have the major movement today. There is some action in the Kiwis uh, look pretty ordinary for the last few days. If you look at it versus the euro, for an example, there is a level there of interest. Let me just get that more accurate. At around about 197.75. We've tested that in today's trading, as you can see, and it was also Friday's high. This relates back to price action around the 3rd of April. So this is maybe just worth keeping on your watch list for right now. Possible move up to 199.89 in the medium term, but I would maybe be playing this as a short-term play looking for a possible move up there. If we just pop it back on the hourly chart, it's got some work to do, but if we breach this high here over that 197.73, we get into a state of trend continuation. So that's, I don't think anything's going to happen with this in the next few hours, but watch this after European Open. Maybe that European trade balance, if it's positive, might take us over that line at 197.73. Um, so I think this is worth keeping an eye on. So primary FX chart of the day um, would probably be. I just want to quickly check out on the Swissy. No, it's not good enough. Probably primary chart of the day would be the euro yen on a breach of um, where we are now, possibly up towards 173. But as a backup, I quite like that that euro Kiwi trade there. There's one to keep an eye on. Right now, let's pop into the ASX. Let me just do a quick check on where this is, where the ASX is at. I might even see if I can. Uh, no, oh, it's got. Okay, so where the ASX is at is it is actually trading almost um, bang smack on neutral. It's 0.06, um, zero point zero 0.06 to the downside. So we ended up being around about 18 points higher, um, and then just give it all up. Remember, of course, we are near record highs on the S&P, oh, sorry, on the ASX 200. So it's not surprising that that's under pressure a little bit. I'll even put an ASX chart up actually, just so you can see the futures. So that's the hourly chart. So you can see there, it is the futures contract. So, there you go. There's this morning's action. So we started off quite buoyantly, and indeed, what we did was we tested the highs from last week. Remember, as I said, these are record highs. So the fact that we pulled back a little bit, we got intraday highs up to 89.50 on the futures contract. So the fact that we've tested that and pulled back from it again suggests that we're looking for a move over this morning's high, which was that 89.56. So just keep an eye on this. It could be an interesting trade just to watch as the day progresses. On ASX stocks themselves, then there's a couple that we've been looking at, of course. NXT 1470 is the level that we looked at last week. BVS we talked about as well. After this drop, it looked as though this was possibly an interesting one to keep an eye on. We got this bounce back into this range, back to the 200 MA. This feels like a higher risk trade, though, and one that may take you up to around about 221. And now that would be a result, but I think I would be patient until we breach 208. So we'll check out that later in the week. GNC didn't manage to breach this resistance, which we had a look at again last week. I'm really interested to see what ASX 360 do. Saw that profit taking retracement on Friday. So make sure they're on the data here. Yeah, and so we've got buying coming back in again. Level to watch out for is a close above that closing high that we got on Thursday, which is around about 44.65. I still think this is heading towards um, $50. LYC was the outperformer and continues to outperform. No resolution on the Ukrainian issue is going to continue to help rare earths. Certainly, Linus is up and away. The tariffs on rare earths from Australia are less than the China, I would suspect, but I would need to do a bit more digging on that. I will have a look. But this just continues to go higher and higher. This is record highs on Linus. And Parenti, I also referenced at the back end of last week. This ascending, short-term ascending triangle type picture here around about $2 suggests this is worth keeping an eye on. Lithium stocks have been very bizarre of late and are really difficult to call. But if we take PLS as an example, 230 looks interesting. So the two I'll be really sort of keeping an eye on would be BVS on a breach of 208 and continuations in 360 ASX and LYC. I just think this fundamentally has got every chance of continuing to move higher. Okay, so um, any charts you want me to have a look at, just put them in there. You need to put them in quite early these days simply because of the slight delay on what I see in terms of how I'm talking. So put those in early if there's anything you want me to have a look at. Let's flick, or let's just have a quick look at IEL. Coming up on the rails is IEL, this education company who, for university placements and do some English language teaching. One breached a key level around about 554, around about 455. And this will be the highest close. We had a pause underneath that last week. There was that candle of dismay after that getting to the downside. I'm wondering whether this is a potential great gap trade potentially. There's even a possibility of a 5 or 6% move up to challenge $5. But if we breach $5, there's a big gap to fill there. Possibly again worth keeping on your radar. Quick foray into the US at the major players that we've been tracking. Nvidia seems stuck now under 182. It's just having a little bit of trouble getting through that. Pulte Group, interesting price action on Friday. We talked about the positivity of this after the change really in expectations for September's rate decision. And that supported this move to the upside. Looks a little shy here, but this is a good level for it to be at. Robinhood just bumbling under that 115 level, 114.20. 150. This looks potentially good. It might be one that you check in on. After this retracement, it's looking to retest those highs for a potential trend continuation. Should just keep an eye on Robinhood potentially. And I still like the airlines. The airlines did very well. Let's just pop here. Let me just alter this. Oops. Let me just put this on the daily chart template. Oh, and let's just pop LUV on there. Really nice reversal from Southwest Airlines, ticker code LUV, back through the 200 MA, which suggests that this reversal is completed. Not sure of the potential upside in this, but possibly a test of 3270, which isn't filling me full of massive happy joy feelings. A better chart, now I was having a look at these before we started, was American Airlines Group. You can see they were pushing hard up against this level here at around about 1321. It was the high on this candle here back on the 10th of July intraday. And that move there looks as though it could be significant. Potential move to the upside could be up around about 7.9% if it happens. So just keep an eye on that for any potential move. I'm going to make American Airlines Group, AAL, my chart of the day for the US. So that should just about cover it for today. Let's just go back and check out a couple that we sort of looked at along the way. Aussie yen still appears to be stuck under there. Euro yen, which we liked, is still looking pretty hot. The trot, I'm just keep an eye on that over the course of the day. And of course, we did suggest also that the major indices might be worth, excuse me, might be worth a look at as well. But I think that's going to be this afternoon's trade, not more in the Asian session, although we still are, even on the shorter time frame, in a long volatility move to the upside. I hope that's been interesting. I hope that's been useful. I will see you again. Don't forget to like Give that little thumbs up, a little thumbs up that you'll see on the screen in front of you. And of course, if you've got anything, any comments, put them in. Um, thank you very much, Wayne. You have a good one too. We will talk soon. Um, and then we shall take it from there. We'll see you back here on Thursday for the same session. Just watch for a few changes going on, and most importantly, trade safe. Have a great rest of Monday. I will see some of you tonight if you're involved at all in the EAs, and I'll catch you very, very soon. Take care. Bye bye for now.